Now, as of recently, it does feel like now more than ever, once again, my dividend portfolio is growing at a faster pace than I've ever seen since I started investing. Now, I've been buying dividend paying stocks and ETFs consistently now for around 8 going on 9 years, basically spending almost all my cash on assets that pay me dividends every single quarter and every single month, so much to the point to where now I have a portfolio that on average pays me around $94,000 per year or around $7,800 plus per month. Now, like a lot of you guys probably know, I still am trying to urgently grow my dividend income in my portfolio, but do so in a safe manner. I don't want to buy into dividend paying stocks or ETFs that are going to decay over time, but I am looking for names that are offering rather high yields. And this is because this year in 2025, I do want to get to the point to where my total monthly dividend income is surpassing around $8,500 per month. So as of recently, I have been buying just a handful of super high quality, higher yielders that offer a boatload of income potential from day one, but also have zero NAV decay. So in this video, we're going to go over 7 of the ETFs that I've been buying very consistently throughout 2025 altogether. And these names specifically have helped me grow my dividend income very, very quickly. Like I said, almost faster than ever before. So if you want to see which 7 ETFs I've been buying like crazy that are definitely helping me grow my income, make sure to stick around, drop a like down below, and let's get right into the first one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So we're going to go through every single one of these 7 ETFs, starting with the lowest yielders, which is SEHD, the Schwab US Dividend Equity ETF. This is an ETF that I've been buying now for around 3 years straight and still buying up until this day. I grabbed a few shares before starting to film this video. Now, SEHD, of course, is not a high yielding dividend ETF. It only has a 3.6, 3.7% starting yield. But the idea is that because this ETF over time pays more and more in dividends, maybe 2, 3, 10 years down the road, my dividend income is going to be extraordinary when it comes to this one. Not to mention this ETF also has grown significantly over time, is well diversified, cheap to hold on to. I mean, what is there really bad to say about SHG altogether? So even though SHG doesn't offer a massive starting yield, like I said, I still have been grabbing more and more shares of it, stacking more and more shares in my portfolio for basically massive dividends sometime in the future. Now, number 2, the next ETF that I've been buying like crazy as of recent that's also helping me grow my income very significantly is one of my other favorites, Devo, the Amplify CWP Enhanced Dividend Income ETF. We've talked about Devo before on the channel, but basically Devo buys into a small basket of stocks. It is an ETF, of course, and then sells covered calls directly on certain names within the portfolio. Now, Devo is extremely stable, pretty low beta because the covered call overlay, it's actively managed, and it offers almost a 5% distribution rate, which is massive considering some of the names in the underlying. What's been great about Devo over time that I've held onto it at least is that the ETF has grown significantly and even paid a little bit more in income over the years over the past half decade or so. Devo is still one of my favorites and it's been on my buy list now for several years, but as of recently, I have been grabbing more and more Devo to get some more exposure to the underlying strategy and of course the distribution rate, which is around 5%. Number 3, the next ETF that I have also been buying a lot more as of recently is one of my newer favorite ones. You guys know about this one if you've been watching the channel. I'm talking about the Goldman Sachs S&P 500 Core Premium Income ETF, or ticker symbol GPIX. Now this ETF, if I'm not mistaken, offers around an 8 or 9% yield, so now we're getting sort of somewhere up there. But the cool thing about this ETF specifically is that because of the underlying strategy, it offers some potential for some upside. I mean, right here in the objective, it says seeks current income while maintaining prospects for capital appreciation, which basically means, in short, if the S&P 500 trades up and to the right, which I mean historically it has over long time frames at least, this ETF is going to seek current income and offer a lot of distributions for investors, again somewhere of around 8% more or less, but also is going to grow over time, which is exactly what it's done historically. Now, like I said earlier in this video, every single one of these ETFs have a positive total return, and every single one of these ETFs have traded up and to the right. Now, what's cool about investing in today's age is that you can buy into higher yielding names that might offer a lot of income from day one, maybe even upwards of 10, 12, 14%, but also you can still seek some capital appreciation, but it all depends on the underlying strategy. And that's why I always tell newer investors, when buying into an ETF, understand what the ETF's overview, objective, and strategy is. Some ETFs out there that you think you might want to invest into might have an objective or a strategy that just does not match what you're looking for. Now, me, for example, I want to build a portfolio over time, as you guys know, that's going to pay me consistent income, hopefully even a little bit more in income over time, but also I want my portfolio to somewhat grow over the years, which is why ETFs like this one is basically more or less spot on, because I personally am wanting income generation from day one, but along with that, I want some prospects for capital appreciation too. Now, another side note, if you guys want to see a massive deep dive into any one of these ETFs, look throughout my YouTube channel. I talk about them all on their own. The next ETF that I've also been grabbing a lot of as of recently is GPIX's brother or sister, GPIQ, the same exact thing, only this one has the NASDAQ 100 as an underline, which gives it a bit of a larger yield, I think somewhere around 9 or 10%. Now, just like I was saying earlier, this ETF basically offers exactly what I as an investor am looking for. Around a 9 or 10% yield, which is a massive amount of income generation, let's be real here, but also because of the underlying strategy, which we're not going to go super deep in today's video. I just want to show you guys what I've been buying as of recently. This ETF also offers prospects for capital appreciation, which it has done so historically perfectly. Now, the NASDAQ 100 can grow very quickly, which means there is a lot of upside, but with the covered call overlay, you're not necessarily going to be exposed to all that upside because of the way a covered call works. But with these Goldman Sachs ETFs, they dynamically sell call options, allowing for participation in negative to flat markets because of the covered call overlay. All to say that in the income producing ETF world, GPIX and GPIQ are some of the best ETFs for my specific strategy, and I've been trying to buy a lot more of both of them as of recently, but they're pretty expensive, but that's not going to stop me from still stacking some shares. Now, the last three ETFs that I've been buying a lot as of recently, which is making my income explode throughout my dividend portfolio, is SPYI, the NEOS S&P 500 High Income ETF, a relatively newer ETF that I basically never shut up about. This ETF offers the S&P 500 exposure. It offers a covered call strategy, which generates around 12% yield, which is insane, but also does so tax efficiently, and on top of that, also has the potential for some upside. Now, again, going back to the investment objective, which is very important when it comes to buying into any ETF, the NEOS S&P 500 High Income ETF, or SPYI, seeks high monthly income in a tax-efficient manner with the potential for upside appreciation in rising markets. So again, even if you're new to investing, even if some of the strategies are a bit confusing, always take a look at the objective and see if it matches what you're personally looking for. But buying into shares of SPYI, an ETF that pays around 50 cents more or less per share per month, this has definitely been helping me grow my income substantially because there's so much yield here compared to the rest of the markets. Now, speaking of the NEOS S&P 500 ETF, also the NEOS NASDAQ 100 ETF, QQQI is also one I've been buying like crazy. This one I have a lot less shares of in my portfolio for whatever reason, but it yields around 14%, pays monthly, and does the same thing as SPYI. Here we're talking about the NASDAQ 100. Now, another ETF that offers some potential upside, I mean, once again, it says right here in the investment objective, but on top of that offers around 60 cents more or less per share per month, which is going to go a long way, even if you have a relatively small amount of money to invest into. Now, this ETF also been trading for around a year now, and over the last 12 months has paid on average around 60 cents per share per month very consistently. And of course, just like any other investment, it can lose value. We can see the underlying NASDAQ 100 take a dip and potentially hurt this ETF. But as of so far, and in my opinion, the NASDAQ 100 still has upside from here, which is why I've been grabbing some more shares of it, even though it's relatively expensive compared to where it's been trading at over the last year or so. This is another one though that's on my daily buy list and has been definitely helping me grow my income a lot. I mean, think about it, just grabbing 2 or 3 or 4 shares of it is growing your forward monthly income by $1 or $2. Another one worth looking into, like I said, if you want NASDAQ 100 exposure in a high income ETF format. Now, last but not least, one of my other favorites that I've been trying to grab a little bit more as of recently, especially on days when the volatility index spikes, is ticker symbol ZVOL or ZVOL, the Volatility Premium Plus ETF, which has a distribution rate of around 31.95%. Now, this personally is my favorite ultra high yielder. This ETF offers massive amounts of income. Around 48 cents per share per month is what we've seen historically. And keep in mind, this ETF costs around $20 or so. Now, the ETF basically shorts the volatility index, which can be very risky. Of course, if you think volatility is going to spike, because again, this ETF does well when volatility stays low and even trades down to the right. Now, I personally think that volatility is sort of going to be at bay over the next year or so. I could be potentially wrong, but I do add more and more shares of ZVOL on red days because the distributions that we've seen so far when it comes to ZVOL have been massive. Again, if we look at all the distributions from ZVOL last year in 2024, 48.5 cents every single month for every single share that you have. So again, this is just theoretically speaking, if you buy 2 shares of ZVOL for around $40 or so as of filming this video, you're going to receive about an extra $1 of forward income. And again, these can change, these can go to zero, everything of course can go to zero. Someone as of recently asked me, well, some of these ETFs sound too good to be true, what is the risk of them? And I said very simply, well, they can go to zero like any other investment. There's of course risks with anything in the stock market, and I think that's sort of obvious, but again, remember to do your own due diligence and figure out what works best for you. So there we have it, guys. Those are 7 different ETFs that I've been buying a lot as of recently, some more than others, of course, that have been driving up my total monthly and total yearly dividends to the point to where they're now at all-time highs, which is outstanding. Now, out of all 7 of those ETFs that we talked about, I know some of you guys might hold a few of them, or maybe you don't hold any of them, but I want to hear from you guys down below. What's your #1 favorite ETF we talked about in today's video? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.